Hello, Vin. Sam Ruben today, our special. Sam, can you please go ahead and introduce yourself? Tell everyone a little bit about yourself.
Hi everyone, I'm Sam Ruben. I'm a realtor out here in the Dallas Metroplex. Been in the business for about 8 years.
Awesome, awesome. And can you do me a favor before we get into the rate stuff? I know a lot of people that watch will want to know what's going on with rates, but tell us a little bit about what is it like right now that rates have gone up that we've seen so dramatically in the last year. What's that like in real estate in your market, in that Dallas metro market?
It's actually, even though the rates have gone up, it's helped the buy side because previously you were overpaying, 20, 30,000 or more to get into a house. Now you're able to get closing cost assistance. So on average right now, I'm getting about $10,000 per contract that we write.
Okay. Now I love it. What's funny is right before we went live, I told you I might interrupt you to talk about jargon, and you put that in terms everybody can a seller concession, and everyone's like, what exactly does that? How does that happen?
Can you repeat that?
Yeah, how does the seller contribute that money? Like, in other words, versus just a few months ago, or let's say 6 months ago, people were in multiple offer situations where they were bidding crazy amounts over the asking price, and now the sellers are actually contributing towards the buyer's costs. What does that actually look like? The sellers, one of our members, they stated.
Gotcha. So basically, what happens is when we write a contract, let's just say the house is priced at 400,000, and the buyer needs about 10,000, and they don't even have to need it, but because of the market, we can get it for the most part. We ask for $10,000 in seller concessions and or closing costs concessions. We add it to the contract, so the seller will pay the buyer $10,000 at closing, but all of that money will be deducted from the funds that they need with the lender.
Okay, and is that a better idea maybe than just lowering the sales price by $10,000? And how can the buyer use that money? What are the most advantageous ways they can use that money?
They can use the money to buy down interest rate right now, seeing as rates are higher. So they have a beautiful 2-for-1 product if it benefits you as a person to use. They can, if they have too much money from the seller, which I've had recently as well, they can use it for paying down debt. They can use it to pay towards some repairs that might be needed on the property. With the VA loan, it's very advantageous to get any type of seller concessions in this market.
Awesome. Well, thank you. So, forgive me. We kind of went down that rabbit hole. I'm going to throw the screen up. And by the way, if I start to get wiggy with the internet, let me know, please. Or if you can't hear me, because otherwise I won't know and everyone else. But I appreciate y'all working with me. Like I said, I'm on a road trip today for everybody that's joining me. So didn't want to let y'all down and wanted to make sure we did keep our schedule. So we're still here. If you're here live, give us a hashtag live. Tell us your name. Let me know that you're here. I see there's at least 7 people that are watching live right now. Let me know if you're here. If you guys start to watch on the replay, if this is a replay for you, do me a favor, just put hashtag replay in the comments. We do monitor the post, so go ahead and ask any questions that you have as well, and we'll make sure that we answer those for you. You can also share any thoughts that you have on that. So, now, Sam, what I'm going to do is I'm going to jump in. Let's talk about rates for a minute. And remember that for everybody watching, this is not an offer to lend. When we talk about rates, we're talking about averages and generalities. You definitely want to make sure that you're finding out rates for your unique situation. And of course, you should be shopping around and shopping your rates. So with that said, a quick recap. And like I said, we do monitor this post, so go ahead and ask any questions or share any thoughts. But talking about a quick recap of what's happened with rates recently and where we've been, rates just got a little bit better last week. Not much, but a little bit. For the most part, improving, but still generally in the high 6s, low 7s. Not really likely that we're going to see them drop down anytime soon, folks. And let those dreams of 5% rates just kind of flutter away. They're not coming. What do you see for your market, Sam, in Dallas? What do you see a lot of lenders, quoting for rates these days? Would you agree they're somewhere within the high sixes, low sevens?
Yes, right now, average what I'm getting from buyers anywhere from 580 to 800 credit scores are between 6 and 7%.
Yeah, and it depends on what kind of loan that you're getting. And one thing I want to emphasize and remind all our veterans and active military, your VA loan does actually generally have a better interest rate than what we call a conventional loan, which is a loan that's available to all the rest of the people out there. So it is worth checking into on a VA loan product and to see about that. Bear with me. Let me pop up my screen again. Doing this mobile gives me a little less versatility. I'm over Sam's face, so here we go. There's the side by side. Okay. Quick forecast on what we got going on. Of course, we don't know what will happen, but based on different variables, we can take some good guesses on where we think things are going to go. It's a lot like a weather report. It's based on what's going on out there. We can get an idea of which direction we think things are going to be in, and that kind of thing. So right now, as far as a rate forecast, it looks like rates are going to stay, kind of stable. I know that's kind of a cop out, but in other words, what I mean by that, we're not going to see rates get significantly better from here, but we're not going to see them get significantly worse. However, we do have an event coming up tomorrow that could absolutely play a little bit havoc on rates, and that's the rollout of what we call the CPI inflation report. So there's two different inflation reports for consumer inflation that we monitor each month. Tomorrow is the CPI, the Consumer Price Index, and it's that inflation report. Now, if inflation has improved a little bit, we could see interest rates possibly improve, maybe a little bit, but it's not likely that they're going to improve much, even if inflation is better, because we still know there's a lot of Fed rate hikes to come, and that's one of the reasons we've seen mortgage rates rise. Now, if tomorrow's inflation report, though, shows inflation still not getting under control, still not showing signs of improving, it could actually cause mortgage rates to creep up a little bit. So, today's a good day to talk to a mortgage lender if you are under contract and if you do have a loan application in. If not, though, and if you're out house hunting, it's not something to be too concerned about. We shouldn't see too much movement. So how does that sound, Sam? Anything you would add to that or any questions about that?
No, I was at a housing symposium last week, and Freddie, one of the people from Freddie and Fannie was there, and she mentioned the rates, the same thing that you said, that they're not going to get too much worse, but not back to where they were.
Yeah, and the one thing that could push rates to go higher from here is if we see a lot of strong economic data, including tomorrow's inflation report, and the expectation that the Fed would raise their policy rate even higher. So what happened is last week the Fed came out in their comments, and in the statement they said, hey, we're not in such a hurry to raise rates. And mortgage bonds loved that. Mortgage rates, that would have been good for mortgage rates if they had just stopped there. But they kind of let the other shoe drop, and they said, well, we're not going to raise them up as quickly, but we're going to raise them higher. We think that they're going to need to go higher in order to really get this thing in check. And everyone was like, boo, hiss. Nobody likes that. Mortgage rates did not like that. So that's what kind of caused a little bit of volatility last week in mortgage rates. And now the expectation that the Fed is going to go ahead and raise those rates a little bit higher than initially expected. And if we think that continues to get higher, that's going to lead mortgage rates to kind of preemptively to go up a little bit. So that's kind of where rates stand. I mean, for everybody that's out there, it's a little bit of a chance to catch your breath, but unfortunately, it still doesn't mean we're going to see those really good rates. Those are expected to come probably towards the end, maybe this time next year. Unfortunately, the economy will probably have to take a real hit to see that happen. We'll see a recession, and that's when rates will actually start to come back down again. So how's all this affecting the market, Sam? How's it affecting the housing market in Dallas?
The builders have slashed prices between 30, 50, 100,000, depending on the price range.
Wow.
Sellers are dropping their prices by tens of thousands every 30 days. So it's definitely affected it pretty bad.
Okay. Does it look like now still a good time to buy a home, or should somebody wait to buy a house?
They should definitely buy a house right now. This is the time to buy a house. It's in your favor. The ball is in your court. You're getting everything from repairs to concessions, seller concessions. Um, the rates are up, yes, but as long as you can still qualify for what you're looking for, you should still buy a house.
Right, right. And as we've said before, we can't guarantee that mortgage rates are going to go down. However, forecasting, it is very likely that over the next 18 months or so, we'll see rates go down pretty dramatically. And that should provide many people opportunities to buy a home now when it's not that crazy market, and hopefully be able to maybe lower that payment later when the rates do drop again. Awesome. Well, is there anything else, Sam, that you would like to add or that you would want to talk about today and share with everybody and all the Vetted VA community?
I would just say don't be afraid of the rates. As long as your payments meet your expectations for what you're looking for, buy that house. Don't listen to people. Do what's best for you.
Yeah, I agree. I think that's great advice. Even if the prices do come down after you buy a home, I think a lot of people are afraid. What if I buy a house for $300,000 and then in 6 months it's only worth $290,000 or $280,000? Is that something that you think could happen? And then do you think that prices would go back up in a year or two, even if that did happen?
Yes, it definitely can happen, and it's happened before. My mom then bought back when the market shifted at one point. House value went down, but they've lived in the house for over 10 years now, and it's quadrupled what they paid for it. So it is a possibility, but that's when you just hold it out and you wait until the price rises again, because it will rise again if it does drop.
Yeah. Yeah, and that's really one thing that we have that's very unique to this market. Normally, if interest rates went up as significantly as we've seen in 2022, we would expect home prices to dip. And it may not be a huge drop. There's no housing bubble. I want to be very clear. This isn't 2008. There's very different underlying variables. It's not a housing bubble. But we would see prices start to decline. And the reason that we haven't seen prices decline dramatically is because there's still a tight inventory issue. There's so many people that are in homes right now with interest rates in the 2s and the 3s that they either don't want to or can't afford to move. So people, they're not putting houses on the market. People that are having babies or making life moves and wanting to, either move up or move across town, get a bigger house, they're not making those moves. So because of that tight inventory, that's keeping
You're breaking a little bit.
Okay. Well, I'll take this as my cue to wrap up shortly. But are you seeing from what you did here?
Oh, you're breaking up bad now. Oh. Are you there? Hello?